Good morning. It's Thursday, September 5th, about 6 a.m. Central Time. Over at the precious metals are seeing a relief rally after yesterday's consolidation and Tuesday's major sell-off. Looking at a recap here of the economic data that came out because it was the JOLTS data. Very important figure to look at here. The JOLTS job opening data came in at 7.67 million versus 8.09 million expected. It was the lowest number since 2020. What happened during 2020? COVID-19. Small businesses weren't hiring, and also the markets are really preparing for this darker time ahead here with the election coming out, and then also how much will the Fed cut rates, and then how much of an economic downturn are we going to see. So the 2-year treasury yield had hit a 1-year low at 3.76%. Also, the 10-year yield had matched that same level at a 1-year low at 3.76%. The yield curve briefly uninverted, meaning that the 10-year treasury yield was higher than the 2-year yield, and at that period of time, gold futures made new high on the days yesterday. The odds of a 50 basis point interest rate cut had jumped significantly on that data release, and that's where we really saw the disconnect, where gold futures were going up and silver futures were still scratching their heads, wondering, how much more pressure are we going to receive from this China news, from other outside markets like industrial metals. Now, overnight, the price action, we've got this relief rally, and the question is, can it hold or will it hold? Now looking at the gold market, up 20 bucks at 25.46. High in the overnight session, 25.48.70 as of this recording. We'll see if 25.50 has any kind of formidable resistance at that level. Now the December silver contract up 51 cents. That's a 1.8% move. Trading back over $29 here at 29.06. Your December copper at 410, up 2. Small rally there, up just over 0.5%. Platinum having a big jump up here, 2.3%. at 9.29, up $21. So we'll check and see if there's any news on Eskom, were there any power outages as far as platinum mining, things like that in South Africa. We'll also want to look at what the total vehicle sales were. Were they in line with the expectations and things like that? Those are just some of the things that come to my head once we see a big jump in an outside obscure market like the platinum market. Also, was there a technical level that was close to being breached, like October platinum at 908? A lot of people were waiting for that pullback below 900 to start to stick their toe in the water on that particular contract. We do have a small little bump up on the crude oil market. A lot of people are trading that market as well, with the October contract below 69 going all the way out to the March trading in the 67s. Now, it does say that OPEC is close to postponing its oil supply increase after prices had slumped. They were expected to boost about 180,000 barrels per day, but now they're starting to rethink that as we get this downbeat economic data coming out of China and also the US. Now, looking at some things coming out here today, it's going to be another busy day. So if you have any feelings as far as your position, if you feel like you've got this relief rally and you're a little bit overweight, this could be the time where someone might rethink the sizing of their position and trim a bit off ahead of what seems to be a busy economic data release here. We do have the ADP non-farm payroll. They're expecting 144,000. Last month's was 122. That seems to be a volatile and unreliable data source. The unemployment claims at 231,000, in line with expectations. You want to see elevated numbers at that. We'll also not see revised non-farm productivity, unit labor costs, services PMI, ISM services PMI, and a whole slew of other things coming out. So expect it to be quite a choppy, quite a volatile trading session in my opinion. So you got to watch things like silver bouncing back up, and I'm going to get into the relief rally versus the trend reversal here in a minute on the silver market. Going to the CME's Fed watch tool, 57% chance that the Fed will cut 25 basis points. Now you look at the 50 basis point cut, 43%. So that had a big jump up, and it could get closer to 50-50 by the end of the week, depending on how this economic data comes out. Now, getting into the gold chart here, gold seeing this bump up here. I really think that this 25.50 small resistance there, remember we consolidated there for almost about 2 weeks here. So gold seems to be comfortable around 25.50. Your trend reversal point, you don't want to see it go below that psychological pocket support, 25.06 down to about 2,500. A lot of people are stacking orders if we do get down there to start to add and start to nibble on some new positions. Really, your key levels here that you don't want to see breached: 24.82, and then that's the 50-day moving average, and then about 24.85. That's your trend reversal point. Takes it back to more of a neutral stance. Now, the nice thing is that stochastics had corrected. Now they're starting to come up just a bit. Now, silver, what I do is, if you know me personally, I'm a big chart guy, right? So I print off charts and I write a lot of notes on charts. And then I stick them on the wall if I find that they have some kind of major levels that I don't want to see either breached or that I'm watching, or a particular chart pattern that seems to be repeatable. Now remember, if you're charting, you're planning, you're looking at a roadmap. You don't just drive to California with your eyes closed. You pull up Waze or MapQuest or whatever the heck you're doing, get out the old map and look at it here, and that's what really a chart is. So a couple things here. We had no follow through after yesterday's bear trigger, and I told you that yesterday that if we don't see the follow through, that chances are Tuesday was just a washout. That was a lot of stops. That was a thin market. People were still coming off a holiday. A lot of people are still traveling. So I think the market makers, the banks and things like that were cleaning up some positions, really caught people off guard, and that's where that washout occurred. So if you get no follow through, washout. If we get a break below that, could be the new trend. So what was really important when I discussed with people was that when you get the bear trade trigger or the bull trade trigger, you need to see that next day, within that first hour, it needs to trade in that direction. It needs to go positive, or it needs to be making new lows on the charts, and then it really sets the tone for a new directional wave, call it, or whatever you want to do. So the thing that I'm most happy about on the silver market being bullish long term here is that, you know, we bounced off the 200-day moving average in early August, and we've got a higher low on the chart in early September. So you don't want to see that violated, but it does give you a definable risk level. So call it $28. Whatever that swing low was yesterday and the day before, that's kind of your new, you want to see that higher low in order to build momentum on this. Now, the headwinds that we do face on the silver market, because you always got to think about that, could get a flat tire, could run out of gas when you're driving on a road trip. So the headwinds, 29.53. That's your 50-day moving average. That's probably where we're going to run into our first level of resistance and look at the average range about 85 cents. Could really do it today here. So because we're about 50 cents higher, we got about 30, 40 more cents here we could run onto the upside. And a retest of that first resistance would be $30. Your trend reversal point is going to be 30.24. So write all those numbers down. Those are kind of the key levels that I'm looking at here. You got any questions, give me a call. It's going to be a busy day. 312-858-7303. Remember, futures and option trading does involve risk of loss. May not be suitable to all investors. Good luck, good trading.